Well, good morning. The topic of the day is maritime frauds. Maritime frauds. So, let us understand what is maritime fraud. An intermediate transaction or international trade transaction. An international trade transaction involves several parties: exporter, importer, ship owner, charterer, ship's master, officers, and crew, insurers, bankers, brokers, or agent, freight forwarder. Maritime fraud occurs when one of these parties succeeds unjustly and illegally in obtaining money or goods from the another party to whom, on the face of it, he has undertaken specific trade, transport, and financial obligations. So, in some cases, several of these parties act in collusion to defraud another. Banks and insurers are often the victim of such frauds. The sinking of an over-insured vessel carrying a highly valued non-existent cargo has been encountered at regular intervals. During periods of economic and political upheaval and depression in the shipping business, there have been incidents of unusual losses. In the last several years, these and other factors have led to significant escalation in the number of incidents that can be termed maritime fraud. So, when authorities in Greece and Cyprus clamped down on unscrupulous actions subject to Lebanon and West Africa. So, at the same time, a spate of suspicious losses and frauds occurred in the Far East. No part of the world is immune from instances of maritime fraud. So, what are the types of these frauds? Maritime fraud has mainly guises, and its methods are open to infinite variations. Majority of these crimes can be classified into four categories: escorting of ships, documentary frauds, means the legal manipulation of shipping documents, and then cargo thefts, means ship deviation and subsequent theft of cargo, and the last one is fraud related to the chartering of vessels. So, a measure of overlapping must necessarily occur between these broad groups in many cases. And in fact, there are many occasions when an element of each classification may exist in a single crime. So, let's understand what is escorting fraud. This is also known as the rust-bucker frauds. This involves deliberate sinking of vessels in pursuance of fraud against both cargo and hull interests. So, with occasional exceptions, these crimes are committed by ship owners in a situation where a vessel is approaching or has the end of its economic life, taking into account the age of the vessel, its conditions, and the prevailing freight market. So, the crime can be aimed at hull insurers alone or against both hull and cargo interests. So, for example, a dishonest ship owner may approach an exporter and offer to carry his next large cargo shipment on his vessel. So, the exporter is to arrange the contract and the proposed buyer to open a letter of credit in its favor to pay for them. No goods are actually to be supplied or shipped, but the shipowner agrees to supply bills of lading to show that the goods have ostensibly been loaded on the vessel. So, the bills of lading, together with such other documents as are required, are presented to the bank negotiating the letter of credit. The bankers pay against documents and not against goods. After ascertaining that the cargo description corresponds to the requirement as stipulated in the letter of credit, the bank, in the normal course of events, releases the funds under the terms of the letter of credit. So the ship without its by now paid for but non-existent cargo leaves port. It should not, of course, reach its destination because, should it do so, the missing cargo would lead immediately to the discovery of the fraud. So, to avoid this eventuality, the ship is deliberated, scattered in a suitable location so as to remove the evidence on the non existent shipment beyond any prospect of subsequent investigation. So, the shipowner enters an insurance claim on its hull underwriters, and he also receives a share of the proceeds from the letter of credit from exporter, leaving the helpless buyer to pursue an insurance claim for loss or non-delivery of his cargo. Then the documentary frauds. This type of fraud involves the sale and purchase of goods on documentary credit terms, and some or all of the documents specified by the buyer to be presented by the seller to the bank in order to receive payment are forged. Bankers pay against documents. The forged documents attempt to cover up the fact that the goods actually do not exist or that they are not of the quality ordered by the buyer. When the unfortunate purchasers of the goods belatedly realizes that no goods are arriving, he starts checking, only to find that the alleged carrying vessels either does not exist or was loading at some other port at the relevant time. So banks deal with documents and not in the goods covered by them. A bank which accepts under a letter of credit a set of documents which appears to be regular on their face is not liable to its principal if the documents turn out to be forged or to contain false statements. Thus, a confirming bank is entitled to obtain reimbursement against such documents from the issuing bank, and the issuing bank is entitled to obtain payment against them from the buyer. Thus, the loss is usually borne by the buyer. So, it is precisely to discourage the activities of fraudsters relating to export cargoes that GIC evolved the ship approval system. This has been extended to full load import cargo also. The vessels usually employed by fraudsters are vessels flying a flag of convenience, vessels over 15 or 20 years of age, usually small sized ships of 7,000 to 10,000 GRT, vessels having changed their name and owners a few months before the last voyage. And then comes the cargo thefts. So there are several variations in the modus operandi of cargo thefts. In a typical example, the vessels having loaded a cargo deviates from its route and puts into a port of convenience. Such ports are Tripoli, Beirut, Almania, Junaid, Ras Salata, and other along the coasts of Greece, Lebanon, and Syria. So the cargo may be discharged and sold on the quayside or in a more sophisticated manner. Such an act is often accompanied by a change of the vessel's name or a subsequent scuttling in order to hide the evidence of theft. So the whole process of an investigation is proved difficult, as by the time loss is known, the cargo disappears and the actual recovery of goods is unlikely. Actual recovery of goods is unlikely. So the owners of these ships are paper companies set up a few days prior to the operations. And then fraud related to the chartering of vessels. This is also known as the charter party fraud. Establishing a chartering company requires modest initial financial commitment and is usually subject to little regulations. In depressed conditions of shipping market, there is no heavy demand on tonnage and owners and access to avoid laying up the vessels are tempted to charter them to unknown companies without demanding any substantial financial guarantee for the performance of the charter contract. So the fraudulent character can turn this situation to his advantage. Having chartered a vessel from an unscripting owner, the charter or charterer conveys for cargo, knowing that in a depressed economy, shippers will be willing to cut corners in the hope of reducing transport costs and thus saving on freight so that their goods can be more attractively priced. The character priced the charterer offers low freight rates on prepaid basis. He can afford to do that as he has to intention of completing the voyage. So soon after the vessel's sails from the port, the charterer disappears. He may have paid his first month's hire, or he might not have paid any higher charges as are due from him. So meanwhile, the shipowner may find himself with substantial bills to meet from port authorities along the ship's route as well as for cruise wages and for provisioning the ship. Worse, this shipowner may find that his ship, not having delivered the cargo to the consignees, has been arrested, and this leads to protracted and expensive legal wrangle. So, in order to get their goods to destination, shippers may agree to pay a freight surcharge or they will agree to a diversion and a sale of goods to cover costs and then start the export processes all over again. So sometimes when no such companies can be reached, the shipowner will instruct the master to divert his ship and sell the cargo wherever he can and thus become as much of a criminal as the charterer. So the question arises as to how damages or expenses arising from an incident of maritime fraud dealt with in cargo and hull insurance. In cargo, clause 4.7 of ICC B and C excludes deliberate damage to or deliberate destruction of the subject matter insured by the wrongful act of any person or persons. However, if the insured desires these risks to be covered, he may request the cover from his insurer, who may grant the same at their discretion, subject to addition of premium or additional premiums. So, if cover is granted, then ICC B and C policies are made subject to the malicious damage clause, which reads like this: in consideration of an additional premium, it is hereby agreed, and the exclusion, deliberate damage, or the deliberate destruction of the subject matter insured by the wrongful act of any person or persons is deemed to be deleted. And further, that this insurance covers loss, damage caused by malicious acts, vandalism, or sabotage, subject always to the other exclusions contained in this insurance. So, as regard covered under ICCA, the risk would be included within the term or risks. So, the exclusion does not apply to ICCA. It should be noted that under all the three sets of ICC losses, loss, damage, or expenses attributable to willful misconduct of the insured is excluded. So, whilst piracy is generally included in the risk embraced within the term of all risk of ICCA, a reuter and who attacks the ship from shore is covered by the Institute Tax Clause Cargo and not by ICCA. There is no cover at all in the ICCB and ICCC for policy. So, as regards the risk of theft, pilferage, and non-delivery, these would be included under ICCA but not under ICCB and ICCC. But ICCB and C may be extended specifically to include the risk of theft, pilferage, and non-delivery at the discretion of the insurer and subject to additional premium. But in hull insurance, under the Institute Hull clauses, 1.10.83 loss or damage to the insured vessels caused by inter alia the following peril like violent theft by persons from outside the vessel, piracy, or barratry of master, officers, or crew. So barratry is defined as including every wrongful act willfully committed by the master or crew to the prejudice of the owner, or as the case may be by the charterer. So the paramount clause number 18 of the Institute Health Clauses, malicious acts exclusions, excludes loss, damage, liability, or expenses arising from the detonation of an explosive or any weapon of war and caused by any person acting maliciously or from a political motive. So the precautionary measures for fraud prevention is that there are certain basic precautions against maritime fraud that commercial interests like exporters and importers, banks and insurance companies should be aware of and should be able to implement, because these are the steps which can control the frauds. Now, in nearly all incidents of maritime frauds, it is evident that dishonesty of one party is combined with misplaced trust and short-sightedness of the other. So traders should beware of low freight rates. There is no such thing as a bargain in business. Everything including the bargain has a price tag. So the present emphasis in the incidents of maritime fraud has highlighted the cargo problem, but in most cases a ship is also involved, and it is likely that the insurer's interest also extends to it. So the problem of a different nature arises with the ship, but the principle that the insurer must exercise every care to check background details of the vessels itself, of ownership and management, and of its trading record is the same. So this is all about the maritime frauds. Thank you very much.